the 10-year, yes. And I could see a corresponding cut in the short-term rates.
A couple of things around this. Let's just talk about inflation for a moment. Do you think, there's a lot of people in Davos, and you talked about ripping the Band-Aid off, there's a lot of people in Davos that are clearly very concerned still about inflation. Is there still cause for concern on inflation?
Yes, the Federal Reserve is ignoring a number of things. For example, wage inflation settled in about 5.3%. Chairman Powell, says that any wage growth, any wage increase above 3.25% that's not accompanied by productivity is inflationary. So if your target is 2% inflation and you've got 5.3% wage inflation, and you have every day we're reading about strikes and labor unrest. This morning there was a piece about the nurses in Chicago getting ready to go on strike. That's not the kind of environment that's conducive to lower inflation.
Okay, so let's say inflation is stickier than we anticipate, that the Fed cuts 2-3 times this year. Talk to me about the kind of returns that we should be looking at. We just had the head of the Norwegian Sovereign Wealth Fund on, one of the biggest sovereign wealth funds in the world, talking about low returns. Is that what we should expect now, low returns?
In the indexes, yes, because they're so dominated by the Magnificent Seven that have to have some reversion to the mean. Let's remember, the 25-year return in NASDAQ is less than 6%. So all we're doing is going back and revisiting historical returns. So a lot of people think that, got to the mistaken belief that you could grow at 15, 16% a year on equities. That's just unrealistic. Always been unrealistic.
We talk about the Magnificent Seven as growth stocks. How cyclical do you think they are? Let's look at this from the other end of the telescope. If you were to get a downturn, do you think there would be more cyclicality in those stocks than you would originally have thought?
Possibly, but I think that the focus will just be on valuation. They will drop from 50 times earnings. If the economy slows, it's just inevitable. So if you have a 10% drop in the price of NVIDIA, that's over $100 billion that has to be made up by something else in the S&P 500 or NASDAQ. So you drop Tesla, you drop NVIDIA 10, 15%, and the indexes are going to look really poor, in terms of return. So that it's going to be a stock picker's market, just like it was in the 70s.
Okay. How easy is that going to... This year feels like it's going to be volatile, Tim. And I'm wondering, in a stock picker's world, how easy it is going to be to pick stocks. You look at last year, the S&P had a great year in picking stocks. And this is always the challenge that a lot of people face. They listen to people like you talking about the idea that we're in a stock picker's market, but then they get into some of those stocks and they get whipped around. And I'm wondering kind of how people should therefore manage that process. What's your advice on managing that process? Picking good stocks is obviously the starting point, but the volatility, even with good stocks, is likely to be relatively high.
It's going to require incredible discipline. So we're holding over 20% short-term U.S. Treasuries, and we're waiting. Henry Druckenmiller was on back in the fall, and he said, the best thing I have going for me right now is I don't have clients and I don't have to deal with FOMO. My good friend Larry McDonald talks about the head fake. Jeff Gundlach talked about it. He predicted this short-term decline in rates en route to rates going up longer term because of the lack of fiscal discipline. So I think you have to be incredibly disciplined and wait because I think one of your prior interviews, he said, Treasuries, cash is not trash. Treasuries in the 5% range present a reasonable asset class, a good return in what will be, in your own words, a very, very volatile environment, I think, in 2024.
Been great to catch up. Thanks for stopping by on a holiday. We really appreciate it, Tim. Tim Pagliara, Chief Investment Officer at Cap Wealth. Sir, thank you very much indeed. Okay, coming up, thousands of angry farmers protesting in Berlin today. This while the latest GDP numbers show Germany narrowing, escaping, falling into a recession. This is a unpopular, you could say, and I do that with a degree of understatement, coalition in Germany right now. We'll turn our attention to what is happening there next. This is Bloomberg.